From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 22nd, 2018. Today we're taking a look at the USDJPY, the US dollar versus the Japanese yen. For today's trade analysis, we're starting here on the daily time frame. Two trends we're looking at. The blue trend line on the left-hand side of the chart, clear downtrend here for the dollar yen, and the black trend on the right side, clear uptrend. Well, let's study the uptrend for a moment. We could see this pattern within the trend. The market started rising. We went into this period of congestion for several days. The blue box that you see down here towards the bottom of the black trend line went into congestion, dipped into support, the pink zone, broke out and continued the uptrend. Then it got above the 100 period moving average, went into this period of congestion here. The black box bounced around for a couple of weeks here and then broke out. Now here we are again inside somewhat of a resistance and potential support range, the potential continuation of the rising trend pattern. Congestion, breakout, congestion, breakout. Now the question is, are we going to go into congestion again? Do the same thing we did the last two times. If you look here in the previous boxes, the blue and the black box, I have these blue trend lines where the market dipped into support before rallying, dipped into support before rallying. So if that's the case, if the market repeats the pattern, we may be looking for that dip into support, the pink shaded area, before the continuation of the trend. Take a look at the orange and pink shaded area inside the blue box. Orange zone is current resistance, and that's not too hard to see the past 3 days. But look back here to the black circles. The first black circle you come to, resistance into the orange zone, that's 111 and 111.25. You see even support into that area. So we know historically and factually that this orange shaded area has been support and resistance before, and it's coming true again as resistance into this area. But not only that, you look at that first black circle at the blue trend line and you see support into the pink zone. Not only that, we can see resistance. I'm going to draw another circle here. It'll be green. And you can see resistance into that pink zone. So we know orange zone and pink zone are our two closest resistance and support levels that we want to pay attention to if we're looking for a trade opportunity. Zoom it in a little bit. If we're going to buy the uptrend, the preference actually is that it's at the pink zone and the black trend line. If you follow the trend pattern, that's what you want to see. You want to see it at the pink zone, 110.45, 110.25. That would be the preference if you're looking for a buy scenario on the yen, buying low, not at the highest high. If you're looking for a sell and maybe the continuation of the pattern where it pulls back, I think the orange zone today makes a lot of sense for that. Close as possible to 111, 111.25 gives you fairly low risk, higher potential reward for going short and looking for that pullback down to the pink shade area. Now that's against the trend, so you should use appropriate risk strategies if you decide to go short close to the orange zone, because if the trend returns, you don't want to be stuck in a short. Stop losses, trade sizes should be used appropriately if trading against the overall trend. Once it makes it back to the pink zone, we can begin looking for opportunities in the direction of the trend again. So the trend pattern is higher. Something else interesting that I mentioned here a moment ago, Fibonacci high to low of the blue trend line. Highest high on the blue trend line to the lowest low puts the 0.618 Fibonacci retracement level at 110.26. Well, guess where that is? That's at the pink zone. So if the market dips back down, it's going to challenge that 618 fib into that pink shaded area. 4-hour time frame doesn't really change it, just shows us the price action is happening around this orange zone. It tried to get above it, couldn't do it. Sudden infusion of sell orders getting back underneath it. So again, the opportunity is not to buy today. Don't buy under the orange zone, but maybe a dip back down to the pink zone like it did back here at the left hand side becomes your opportunity to buy. The next opportunity would be the break above the orange zone. Until one of those things happen, above the orange zone or dip to the pink zone, there may be an intraday opportunity here into the upper 110s towards 111 for an intraday short targeting the pink zone for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.